Welcome to another episode of Goddamn Liberals. In this episode, we try to make sense of the federal income tax bill signed into effect for 2017 and beyond. Here are your hosts, Will and Robert.
All right, so welcome back to another episode this week on taxes. But before we get to that, we wanted to go back and mention that Charles had actually listened to our last episode on the difference in what states contribute but take when it comes to taxes versus public benefits. And so about 6 days ago, about a week ago, Charles mentioned, so think about it. If you have a populace that is broke and starving, they are much easier to aim. Blame, insert a group here for all your woes. It's what the Nazis did, and see how that works. So, yeah, I mean, there are a lot of parallels. I've even tried to draw some parallels with some family members of how this Republican regime works to Nazi Germany. But I don't know if you had a chance to take a look at that, Will, and any comments?
Oh, I saw the comment, and yeah, like that is a good point. Just it's if you keep people poor, it's really easy to point in a group and say they're your problems, they're the reasons why you're suffering, when really it's the systemic issue that you're trying to keep them from actually understanding.
And it's a theme that we've talked about, even with Loeffler and Perdue. I guess Loeffler a little more since she's so rich. Why folks continue to look at them as somehow helping them when over and over their voting record and who they actually end up benefiting while they're in office, it doesn't go the same way.
Yep.
So, yeah, thanks, Charles, for chiming in there, and it's definitely a reoccurring theme that we've got going, with our episodes. So today, it's the 29th of December, and the 2020 tax year will be ending in about 2 or 3 days here. And then we'll all have more fun in the new year with everything else going on, but how to file our taxes and potentially pay Uncle Sam what the Congress and President have decided that we should pay. So if you read the news, you've got a number of different stories that come out. These large multinational corporations somehow, finagled their numbers and to where that they don't hardly pay any taxes at all.
Yep.
One of the articles that I found was from NBC News. They, this was from 2019, so not too far ago there. And most of the comparisons we're going to talk about have to deal with before and after the 2017 tax bill was changed over. Mm-hmm. So the Tax Cuts and Jobs Act, as it was labeled, cut the corporate tax rate from 35% to 21%. And then even with that change, you have a number of companies, they say doubled from 30 to 60 that are actually not paying any taxes whatsoever when it comes from corporations. So the list of companies, and there are some typical names that you see on these stories like this, but Amazon, Netflix, Chevron, Eli Lilly, and Deere and Company, manufacturers tractors there. But with the amount of money that these companies pay in lobbying, to sit down, and then get in front of these congressmen up in D.C., it seems to be working out pretty well for them. So, Will, is there anything that you envision or think that this idea of not taxing corporations but taxing people, how it helps anybody?
Oh, yeah, actually, I think I have a lot of thoughts about sort of the framing of this issue. I guess I want to go on a minor detour, but it's when people talk about increasing corporate taxes or decreasing them, they talk about it as if that would increase or decrease the amount of money that the corporation had available. So when you say like say you increased it from 21% back to 35%, the highest bracket corporate tax rate. As you just mentioned for like Netflix, Amazon, and so on, that doesn't actually impact them because they're not in those tax brackets. That doesn't change their ability to make money in like because of the way they have their finances set up. But what's interesting is that what it does do is it means it's easier for corporations to claim a profit. So if you were actually saying that you were a company and you filed your taxes and you said you made money, which most companies simply don't do, that means that a lower tax rate just means that it's easier for you to save and you have less of an incentive to spend your money. Because if you can save like $1 million, I mean this effective, so if you're going to save an extra $1 million in income, this effectively lets you keep an additional $140,000, whereas before you'd have had a lot bigger incentive to spend the money because so much more of it would have been taken away.
Yeah, and I think I did some looking into this, and I forget what the actual tax form that corporations file, but one of the top line items that they can just simply write off of their income is charitable contributions.
Yep.
And so a lot of companies, they will go ahead and match their employees' charitable contributions, similar to what you just mentioned, because it doesn't cost them anything. As just one example. Another recent change is the 3-martini lunch that is supposedly going to, it seemed to be retroactive, or maybe it was just from that start there, but it seems to go into next year that now businesses can claim the full cost of their quote business lunch, whereas before it was only 50%.
Yeah, that's definitely another way. It just if absolutely everything is a business expense, then it's trivial to say like, oh, we spent all of our profit, so we pay 0 in taxes.
Yeah. And the result of all this is there's another story that's out here from the Washington Post, is that an alleged promise that the tax cut will pay for itself, but it's just not happening. The price tag for this tax cut was around $1.5 trillion, and it was funded mostly by debt. And the the U.S. deficit just keeps rising.
Yep.
So it doesn't make a whole lot of sense as to why we even did this, other than just a lot of people not wanting to pay any taxes, lobbying Congress, saying, hey, it's going to make a lot of sense, and we're just going to threaten you, I guess, with campaign contributions in order to make you vote this way.
Yep. Yeah, this is actually a neat and a little bit nuanced topic. When companies would, I guess they essentially claim on their taxes that they spend all of their profit in order to have $0 in taxes, but of course what they actually do is they claim taxes in different countries so that effectively becomes money that doesn't need to be taxed for them. That's how they build up those large cash reserves. So it's but they're not oh, sorry, I lost my train of thought.
No worries. It'll come back. There was another promise that was quoted by the Washington Post here, is that money will come back flooding in from abroad. So these large multinational corporations, Ireland is an example, where they have cut the tax rate over there to encourage businesses coming in. But the article here says it's only been a trickle. Trump kept talking about $4 to $5 trillion that companies had stashed overseas because they didn't want to bring the money back to the U.S. and get socked with a high tax rate. So they're trying to say that this money will just magically reappear. So supposedly, so far as of the date of this article, and let me just double check the date here, this was also April 2019. Keep in mind, if we go back, that this tax change happened in 2017 forward. That, scroll back down, only $665 billion has actually come back into the U.S. But of course,
Yep.
to try to sell this to everybody, they said that $4 to $5 trillion would come back into the U.S.
Yeah, but these are just cash holdings, right? They're not like, it's just money that's sitting in an account somewhere. It's not being used for anything, right?
Allegedly.
Okay, but what's interesting is like that, where it's like, okay, so they moved their money back to the U.S., but if they're not actually spending it, that doesn't mean anything to the economy. That doesn't do anything to help wages. That's not the economy isn't people having money. The economy is people spending money. So if it doesn't matter if they make it advantageous to bring the money back into the U.S. if they're just not going to spend it.
Yep. Another, I'd have to go back to actually find the politicians that were touting this. At the time, I want to say locally it was Karen Handel and probably even Barry Loudermilk here in Georgia, who were touting the wonderful, you're going to be able to do your taxes on a postcard and all that. But the one thing that they did is they changed the withholding numbers. So when you go to your employer and you say, well, I'm single or I'm married or I've got 0, 1, or 2 allowances, traditionally most people got a refund back if they, were pretty reasonable. They didn't try to, finagle those numbers. Well, what they ended up doing is changing those withholding tables. Everybody ended up getting a little bit more in their paycheck. There was also the meme going around of the crumbs being spread around, but that's another side story. But you've got this case where, okay, yeah, you're not getting as much tax pay, but the next year, many more people were having to cut checks. So while your overall, tax debt was lower, the country's deficit is going higher. But in addition to that, you better hope that you had some money stocked away to pay the difference.
Oh yeah, that's absolutely correct, because it's like, not only is it bad to sort of change how people's spending habits are supposed to be, like in this case where they expected that they weren't going to owe money at the end of the year, but it's also much better to have it as because with that income tax deduction, it's nice because you simply don't have to think about it. You like as a worker, you don't have to do anything extra, and you know that like your taxes have essentially already been paid. But by changing that, that disrupted a lot of people's patterns, because whereas before it would have been like, oh, I'm going to get $1,000 or whatever back from the government, all of a sudden it's like, oh, now you owe like $1,000 to the government. It's like, where's that going to come from?
Yep. So I remember in the political work that I've done in the past, we ran some polls, and it was pretty much unanimous that folks were not getting refunds anymore. They were hoping that they got this tax sort of way to actually write those checks to the government because they didn't count enough tax to begin with.
Mm-hmm.
Another promise, and I think you actually found some more details beyond this, but there was a promise that wages are going to rise, claiming that the average American would get $4,000 more a year because of the tax bill, and that really hasn't panned out much either.
Oh yeah, no. So this goes back to what I mentioned before, where when you lower the tax rates for corporations, they actually have less of an incentive to spend money because it makes it cheaper for them to save up money to use for later. Whereas, like the naive line that Republicans like to peddle is that, oh, lowering the corporate tax rates means they have more money, when since they're not, like their effective corporate tax rate is 0, that's actually not the case. But what I found was it's some charts of how household income is increased since 1968 across different income percentiles. So what's interesting is these charts are all inflation adjusted. So like if you made $7,000 in 1968, that's effectively the same as making $53,000 in 2020. And while these numbers have increased for just everyone across the board, what's interesting is how certain sets of people have gotten a much bigger increase than others. So, for instance, that $53,000 of income in 1968. Let's see. So if you're at the 50th percentile in 1968, in 2020 dollars, you'd be making about $53,000. Today, the 50th percentile household would make about $68,000. So that's an increase of about like 25%. It's something, but it's not like that much. What's really interesting is once you get to like the top 10% households, because in 1968 it would have been about $114,000, but today the top 10% household makes over $200,000. So that's like 75%. And as you get closer and closer to just the top few families, it gets even bigger. So for the top 5%, you go from about $140,000 to $270,000 per year, and that's almost double over the past 52 years. So there's clearly something like, while there are people making more money, well across the board on average people are making more money, people in the higher income brackets are making money at a lot faster rate than previously.
Things always work out well that way. Another change that will also happen with the 2017, and I guess it goes back to one of the promises, even though it still hasn't happened, that you can do your taxes on a postcard.
Oh, yeah.
Last time it was, no, you still can't do your taxes on a postcard. But the difference in the standard deduction versus item deduction. So what many couples and many middle income families can do is take the itemized deductions with the old way of doing taxes prior to 2017, and the main chunk of your itemized deductions was mortgage interest on your home. And then would then get added onto those like local and state property taxes. And so what you had was sorry.
Oh, so you're saying this actually hurt homeowners, like people just buying homes, especially people in the middle class buying homes.
When you take a mortgage on that, I worked in the industry for 10 years, the most interest typically you'll ever pay on a mortgage loan is in the first year. Mm-hmm. Because as you start, rolling down the principal, the amount of interest that you pay goes down. So, for example, I did a quick calculation. If you took out a loan for $300,000 today at about 3% interest, that's only $9,000 in interest for the first year or less. To me, and going into next year, you have to have at least $12,200 in itemized deductions just for a single person. And if you're a married couple, that doubles to $24,400. So what you end up, you're basically put on an even playing field with everybody else. So the folks that never had a mortgage, yes, their standard deduction increased, but many folks would argue and quote that in air quotes the American dream to own a home. There's honestly not much incentive to be there other than just something that you may own one day.
Yep. It's funny to me because that's a common talking point among Republicans and trying to appeal to the middle class is like, oh, everyone should own a home. Look at it's interesting that this policy just sort of directly makes it so much harder for someone making an average salary to actually buy a home.
Mm-hmm. And then on top of that, as we talked about on the last one, state and local income or property taxes, those were capped at $10,000. So you've got a standard deduction that you've got to try to add up to, for a married couple, over $24,000. And then even if you get there, if you're also taking out your state and local property tax, you can only take the first 10,000 of that to potentially go there. So going back to that calculation, remember I said $300,000 mortgage at 3%. That's only $9,000 a year.
Yep.
This theme comes up again. You typically are going to be richer to take out a larger mortgage to pay more interest and therefore get a tax deduction.
Oh.
So it's getting shafted here again when
yeah.
when supposedly Republicans are looking out for the low person.
Mm-hmm. Yeah, because that definitely hurts lower income people a lot more than higher income people, because the higher income people get such a much larger deduction.
Right. Now, interestingly, I guess because of the way that interest rates have been finagled, interest rates are very, very low still, about the 3 to 4% at the most. Folks still seem to be buying real estate. So I had predicted some time back that this was going to kill the real estate market, but it has not, interestingly. I still feel like we're going to have a bubble again. Now, you don't see what happened with the last mortgage meltdown, where all these subprime mortgages and, you state your income and all that. You don't have that too much going on, but anything that goes up is going to eventually come down. And especially with, the housing market and everything else, it just still feels like a bunch of smoke and mirrors.
Mm-hmm. Yeah, wasn't there I remember Donald Trump ran on repealing Dodd-Frank, which like Dodd-Frank, of course, is famous for making a lot of the really scummy housing practices illegal. I remember that it was weakened, but I don't remember if it was actually fully repealed.
Yeah, Dodd-Frank was so big. I'd have to go back and actually dig into some of that. I know that the CFPB was also created, the Consumer Finance Protection Bureau. That has also been in the crosshairs of Republicans as well because of their bankers not being real happy that they can't do business the way they used to.
Mm-hmm.
So how do we fix it? So, Joe Biden has run on, increasing corporate taxes, reversing some of the policy changes that went into 2017, and you can probably set your clock by it. All these Republicans that voted for this huge tax cut, the deficit kept going up higher and higher, just like it did back in the 80s with Reagan and his regime.
Yep.
But they're going to start pointing back at this and saying, well, we have to cut government spending now. And because the deficit is going up. I mean, this is something you should have thought about years ago instead of just following your donors and doing whatever the hell they want you to do.
Oh yeah, they don't care at all about that. They just they know it's a talking point that resonates with people because they can make it sound like we're being fiscally responsible. We're like the Democrats want to spend all this money that we don't have, when really Republicans are the ones who just voted for all of it. What is it? Was the deficit at $3 trillion this year or something?
Mm-hmm.
Yeah, it's Donald Trump signed all of that into law. He didn't bellyache about it. There's if it's the hypocrisy is obvious, and the deficit is only meaningful to Republicans when Democrats are in power.
Yep.
You can't claim that you're physically responsible, but only be saying the rhetoric when you don't get to choose what's being spent on.
Well, when you're a Republican, you have God on your side too. So you can't question that.
Oh, of course.
So we'll have to see, and the Georgia Senate race is going to be ever more important with this topic because Mitch McConnell already this week, has put the brakes on any sort of stimulus for folks that are unemployed.
Yep.
So he even said in one of his campaign rallies that any Democrat bill is not a good bill, and he's just basically going to stomp all over it when it comes his way if, the 2 seats from Georgia end up going Republican way. So
because the bill that just passed in the House, that had widespread bipartisan support, right?
Yeah,
the one that
allegedly, yeah.
Okay, yeah. Yeah, so it's and all it does is increase the stimulus, so it's mind-boggling that he's blocking that.
The other topic, and this goes back to the 80s when the term trickle-down economics was called by Reagan and his Republican regime back then.
Yeah.
I don't see a whole lot of trickling down of this money. I mean, even the stats that you mentioned earlier, the rich are getting richer, and the poor are getting poorer.
Yeah.
And I just don't see this sustainable.
Yeah, because while yeah, you're right. Just the rate at which people in higher income brackets are making more money is just so disproportionate that it's obvious that money does not trickle down. Just people who make more money, it's a known economic phenomenon where the more money you have in general, the more money you save. Letting rich people have more money just means that they have more money in the bank, not that they have more money they're going to spend. Whereas it's, I guess the thought experiment is if you give a poor person $1,000, they're just going to spend the $1,000. But then you give a rich person $1,000, they'll usually save 2/3 of it, and then maybe they'll spend 1/3 of it. But it's of course it's better. The poor person can use it so much more to improve their livelihood, but also the economic argument is, well, you just essentially put money directly into the economy because they just spent it.
Yep.
Whereas the rich person put away 2/3 of it for another day and effectively took it out of circulation.
Yeah, I mean, even some friends that got the last stimulus check, they put it straight into savings because they didn't know what kind of taxes they were going to pay on it. Yep. All that's unclear. I actually saw a mom over Christmas. She works for a bank, and the other part of the stimulus and the PPP, the Paycheck Protection Program, a lot of these banks are making actually pretty nice premiums. And in the banking business, you have what is called a premium when they do a mortgage, and it's usually a percentage of the loan amount. Some of these PPP loans are being done about 5 or 6% of a loan amount that goes back to the bank as just an origination fee. But her bank down in South Georgia, they're actually looking for the money. And she wasn't clear because I said, well, Mom, are you saying that the bank is supposed to not collect on the loan? Because that's also been a gray area on other folks that have been involved with PPP loans. It was unclear whether you're going to have to pay a loan back or not. That's number one. So if the bank loaned the money out, and they're not going to get the money back from the borrower because it's forgiven, then the government's going to turn around and write the check back to the bank to make it whole again. That's all up in the air, and probably no clear direction because, Republicans, they just want a half-assed government to work at 50% of that.
Yeah, and the more uncertainty there is in how taxes and housing and loans work, the more people are just going to save instead of spend. And of course that continues to be worse for the economy. There has to be structure that people can rely on, or else people don't feel comfortable doing new things or making these large purchases.
Yeah. Well, I mean, it also was fitting that the president didn't pay any taxes. What was the one year he paid $750 in taxes?
Oh yeah. Yep.
Well,
yeah,
that's a lot of
multiple years. Yeah, multiple years $0, and that 1 year $750. Just
must be nice. But we think that the state of New York will be in the new year active, and we'll see where that goes because he's definitely going to have to do some explaining.
Yeah, looking forward to see what comes out of SDNY.
Yeah. But other research, any other topics or points that popped up when you did your research there?
Oh, let's see. Yeah, I guess. Yeah. Are you familiar with Richard Thaler, the economist?
Don't think so, no.
Yeah. So Richard Thaler, he won the Nobel Prize for effectively inventing the field of behavioral economics. He has a really good article on just sort of his proposed tax plan, and effectively the tax plan is on all income above on all income above $1 million, it's 28%. This is actually similar to a tax plan Reagan had. Richard Thaler's difference is that there would be no deductions on that income, and that marginal income tax rate would be the same for all sources. One of the ways a lot of rich people get around paying taxes is by changing the kind of income it is. One example that he brought up was that Mitt Romney, of course, is famous for paying 14% in taxes instead of 28%, despite making a lot, because he doesn't, well, according to the tax code, he doesn't get a salary. What he gets is what's called incentive fees. It's something that you can get if you work in the stock market, and it counts as capital gains taxes, as capital gains income, not wages. So despite effectively functioning as wages for him, he only pays that 14%. Richard Thaler's point was that if all sources of income were taxed at the same rate, you all of a sudden no longer have an incentive to do that. Like, oh, is it an estate tax? Is it an estate that I'm getting because someone died? Is it salary income, or is it capital gains? It's just, oh, it's income, therefore it's taxed at this rate. And I found that it's a very elegant solution, because it means that, like, you can't do that. Oh, I'm not really making a salary. I have no salary. I only make capital gains. I found that very compelling.
Yeah. He's
also,
basically calling out the hypocrisy that these tax codes have changed over the years.
Mm-hmm. Oh yeah, and especially since it would increase capital gains taxes, which, effectively capital gains, it's money that the economy gives you because you already have money. This isn't money that you're really working for. It's just, you had $1 million and now it's $1.1 million because you let it sit in the stock market. This isn't value added to the economy. It's just, the companies you invested in are now worth more. So it's another idea that I, right, for the reason you pointed out.
Yeah. We'll see. We got the stimulus, whatever they're going to do with that. I guess they're playing it back and forth like a football between the White House and the Capitol in D.C. We've got the Senate races. A fun fact on the Senate races, because Kelly Loeffler was appointed to her position, I believe she gets to stand in for the certification of the votes. But I believe David Perdue, technically his term ends this year, so he actually has to sit out, I think, a couple of days at least, and hopefully indefinitely if he doesn't win the re-election, with the results of the runoff here in Georgia. So we shall see. Any other topics or thoughts you wanted to share? Yeah, Liz, you will.
Oh, can you hear me?
Yeah, you're back now. Yeah.
Okay, good.
But no, I didn't know if you had any other topics to get in on this session.
Oh, nope. That's that's really it. Yeah, I'll make sure to link the. I'll send you the link about the Richard Thaler, just sort of proposal. I found it. It's very well written. Richard Thaler is a great writer. So.
Cool. Yeah, I'll get that added in. So, thanks for taking out the time, and we'll look for feedback and plan our next one in a week or two.
Yep.
Thank you for joining us for this episode of Goddamn Liberals. We welcome your feedback. Please comment on this episode below or send us an email at peachnewsnow@gmail.com.